Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, August 19th, 6:42 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Okay, taking a quick look at futures. A lot of red on the board this morning, down about 1% across the board. Just for the sake of time, I'm not going to drill down into each of those specifics. You can easily do that on your own. But like I said, down about 1% on everything. Oil, Bitcoin's down 6%. You're looking at the chart right there in front of you. What I want to do is I've entitled this video, Finally Balanced. And that's what we have been for the last quite a number of sessions, 3-4 sessions this week. You know, right at the top, a lot of doji bars, indecision, can't break out but haven't broken down yet, etc. This may be the, this down morning may be the, the opening salvo in a pullback. I want to revisit the general thesis from early in the summer, and that is one, I think we've been consistent all along. Bear market rally, right? Vicious kickback rally, squeezing out a ton of shorts, etc. I think in general we've been on the right side of that trade. We want to stay evidence-based, not out there, trying to call tops every other week and doubting the trend. We've been on the right side of the trend, and we're looking for evidence that the rally may have concluded. Remember what Jay Powell has told us. He wants to bring down inflation, job one, even at the sacrifice of jobs themselves. Cool off the labor market, cool off the economy, suck some demand out of the system. And the way he's going to do that is by raising interest rates and reducing the balance sheet. And so what has happened over the last 6-8 weeks is that financial conditions have loosened, right? And that has allowed all the meme stocks, well, all stocks really, given stocks the room to breathe and to move higher on this rally. And that's been exacerbated in that meme stock behavior, the junk stocks, the ARK stocks, those higher beta names. And we've said all along that Jay Powell still holds the high ground, right? If you think of that battlefield, you want to have the high ground. It gives you the advantage over your enemy. And Jay Powell holds that position still. And so the rally has, in fact, given the Fed more license to continue raising rates. I mean, if we were down at the June lows and falling, then financial conditions are tightening and the market is doing work for the Fed. So it's counterintuitive. The higher the market can go, the more he can raise rates. The lower the market goes, then he can moderate, because that's going to, in general, they go counter to one another. Also, remember that in September, the balance sheet runoff jumps up to $95 billion a month. And I think it's been running like 30, 40 over the last couple of months. Well, it's due to double at their next, formally announced at their next meeting. So let's dive into the charts and kind of see where we're at, and kind of think about the levels that are going to be important to watch, not only today, but into next week. And if a change of posture on our part is warranted. So let's look at Bitcoin, a very good proxy for liquidity and risky assets. Bad break this morning. We talked about this 24,000. We talked about yesterday. It had, dropped marginally below, but still holding the 50. And now today it has just let go. And no coincidence that it stopped right where it did. Right here, I'm showing 21,650 more or less. But look at the line, resistance, 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 support, 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 support. So now this line where it's sitting right now is an important pivot for today and going forward. If price can hold it, crisis averted. But if it breaks, then your real next level of support is back down at these June lows, down around 19,000. So even if you're not trading Bitcoin, it's a good proxy for liquidity and general financial conditions. Oil had a good day yesterday, but now it's down 1.5% here this morning. We need to continue to watch this downtrend line for oil. And, while yesterday's rally was nice to see, 2.27%, until you break the downtrend line, you really just have noise. Now, if you're trading, on a 5-minute chart or a 60-minute chart even, you can make a lot of money down in here. But if you're really looking to do some kind of a major multi-day, multi-week swing, you're still down below the 200 and you're still below the downtrend line. So in the whole scope of things, yesterday's move is a nothing burger, right? I mean, it did recapture this level, but in order to, unleash a big run, job one is simply breaking the downtrend line, and it hasn't done that. Our oscillators are unchanged down at the middle of the range. Remember, just the general type of action in these oscillators is, overbought, stretch to the upside, stretch to the downside, stretch to the upside, stretch to the downside, stretch to the upside, back down to the middle. While you could probably go through the charts and find instances where, it got to the midpoint and went right back up. Maybe here was an example, came down towards the middle and then went overbought again. But the general pattern for these oscillators is to toggle between extremes, right? So while we could go up, I think the general rule, if you will, is that once you go overbought, you're probably going to hit oversold before you get, the upcycle, as it were. So same thing with NASDAQ down towards the middle of the range. Now, what I want to do today is I'm not going to spend a ton of time on each particular chart, but I want to show you both the 60 or the daily and then the 60-minute charts right across our whole spectrum of charts that we watch each and every day. So here on the SPY, we've been trapped right here at the top against the 200 SMA. We've got a very nice uptrend line, which we're currently holding. But in the pre-market, we've we've dropped below. So we need to watch that very carefully today. And just as a reminder, today is August OPEX. You're going to want to review your holdings very carefully. Make sure you don't forget about something that's expiring today and all of a sudden get, assigned thousands of shares that you didn't really want. So make sure you go through your thing, decide if you're going to close them, buy more time, etc., etc., etc. So watch this downtrend line today. And remember, on the daily chart, you're most concerned about daily closes, right? You could have, we could open down here and have, a scary spike down, and then they buy it up in the afternoon and end up exactly in the same spot. So it's just the closes that you're worried about. 60-minute chart. Here's our nice uptrend channel. We really, yesterday was a nothing burger, didn't do anything. Right here, it really couldn't get above 427.50. But now this morning, we're down here around 423 in that area. Keep that level in mind for today. You've got a prior high here, which should make this level support, but also recognize you've got a high volume over price bar here that comes in right around 425. And then once you break below a high volume over price bar, what was once a support level becomes a resistance level. And then notice what happens to the profile. You get a void. And that's typical in these situations. Large volume over price bar, void. Large volume over price bar, void. Now in this instance, there were a lot of transactions. So in this instance, we have a big value area. So let's watch this 423 to the downside. And if, that were to break today, then for next week after options expiration, I think there's room to move down into this area and possibly test the top side of this gap and our big support area between 410 and 415. Now, remember on the daily chart, let's just go back to it because these comments are going to ripple through all the charts and I won't have to make them again. Breakout, back test, check back to where it broke out. That's a very common everyday move. And then if it wants to go higher, comes into big support, bounces, and then comes up again. So, and just because it did that, pulled back to support, that doesn't mean that, oh my God, we're going, to new lows. It could potentially be that, but it doesn't mean that. Now, my big line in the sand has got to be 410, and I think it should be for you too. I think then the bears will have certainly asserted themselves, proven it technically that the rally is over. But remember, our base case is that this is a bear market type rally because I think the Fed is going to continue to tighten financial conditions, make it hard for stocks to really go up. Here on the same thing on the Qs, multiple days, toggling around 330. Yesterday was nothing, 0.2%. We've got the 200 EMA below. That comes in at 226. And then we've got the downtrend line, which should act as support on any pullback today. What you don't want to see is closes back below the 200, back below this downtrend line, and certainly you do not want to see this big support zone break to the downside. That would open up a lot of room. And I think now, we're gonna be down, let's just say 1% at the open. You got to hold 322 at the top of the gap. I mean, if price penetrates that zone, then I think most likely it will fill, and that's certainly one where you want to have alarmed, because that's a great risk reward trade. If you set your stop somewhat above, you're playing for a $5 opportunity there on the Qs. And then if that were to break, then then it really starts rolling downhill. We had opened down, Thursday, down on Wednesday, and all price was able to do yesterday was come back and back touch the bottom of the gap, but it could make no further progress there. Notice the 8-day right here acting as support. You've got a larger volume over price bar here. So you get down below this level, then you got to look to the downside. Now, I looked pre-market, and we're sitting right at 196. That was a level that we talked about yesterday, and actually the day before. You got a prior low, you got a shelf of support at 196. We are there in the pre-market. You get a break below 196, then I see 194, and then probably a touch of the top of the gap down towards 193. Now, I want to point something out, and we talk about this all the time. You got we're down 1%, right, in the pre-market. Let's assume that holds to the opening. Remember, that very common technical move doesn't happen every time, but enough times to be aware of it, is they rally it hard out of the gate. Say we're down here at 196. We'll have a $2 gap above. They pound it hard out of the gate, close that opening gap, and then it fails. It comes right back down, versus just gapping down and then heading south the rest of the day. I think with August OPEX being today, there'll be a lot of motivated market makers and such, that a lot of market forces want to kind of keep price contained on an expiration and not let it get away from them, because anybody, they want to make the most people lose. So people that were positioned bullishly here, or bearishly, what screws the most people over in the market, that would be basically pinning price within a narrow range. So all the bulls lose and all the bears lose as well. So be ready for that move if you're an active trader. But as far as going into next week, you don't want to see closes below 196. Meta. The scenario that we talked about yesterday actually played out. what was the scenario we talked about? First touch into massive support at 172 was bought, right? First touch, 172, massive support, got a big bounce. Actually, yesterday played out like the scenario that we just talked about. Kind of a gap down and then a rally back up to fill the opening gap, and then it stalled. So today we are set to open right around 172, which is massive support. And like we discussed yesterday, you get a close this afternoon below 172. I'd like that. I like that as a short going into next week. Now, you would be obviously free to say, I know we haven't broken it, but I want to take a short position, into next week as a, kind of a swing position and bet on it failing and coming back down. But the classic way to do that is wait till it breaks, then get short. So I would expect that today they will hold Facebook above 172. We'll have to see. Just follow price. Apple on the daily chart, rejection. All these lines of rejection right here at 175. We spent a couple days trying to get above. We filled this sliver of a gap, so that's no longer there. I mean, one of the leaders in the market, no doubt. We've got a nice uptrend line. You can, play that one of two ways. You can say to yourself, I want to get short against 175 on the daily time frame. And hey, you know what? If they can take out all this resistance, you tip your cap to the market, you get out of your position, then you've got a great long to shoot against on 175. But you can see that there's a lot of resistance right here. Oh, wrong way. Here's a 60-minute chart. We talked about 172.50 is first support on the daily chart, on the 60-minute chart with this volume over price ledge. And then you've got that void that really, there is some support down in here, but you can see the big support is 164. But, if you're actively trading, you probably wouldn't want to wait from 174 all the way down here before you opened up a position. So if you wanted to tactically, if you saw price break below 172.50 today, then you could be short against that line and simply play for your first target, which would be the bottom of the uptrend channel. Tesla put in a double top the other day. Really hasn't been moving significantly since then. Just, kind of drifting. Holding the 8-day. You've got a large volume over price bar here between 890 and 862. That's relatively wide, $30, but it is what it is. Remember, on this double top setup, the actual trigger for the formation would be a break of 850, and then you have a $75 measured move, which brings you down to 775. Pretty amazing how that works out. So it's the distance from the top to the bottom of that. If you can think about it, it's a reverse W. Here's the one leg, here's the middle, and then here would be the right side of the upside down W here. So got some definite levels to watch. Let's zoom down on the 60-minute chart. I think you've got a good level here. I looked pre-market, and it's sitting right in this 890 area. So it has already come down to this level of support here at 885, 890 area. That would be the place that I would be watching today to see how price handles that 885 area. Microsoft, another strong stock, but stalling here below the gap. We have been talking about 290 the whole time. Rejection, 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 high, volume over price, resistance above. We've spent the entire week above 290, but not being able to make further progress. I looked this morning, and we're sitting right at the top of this gap and the bottom of the 1 hour channel on Microsoft with this $5 gap below. So that's going to be your prime area of interest today. You lose the uptrend channel and you enter the gap. That's a sell signal. And then you'd be playing for that $5 move down to the bottom of the gap today at 282. Amazon daily chart. Double bottom. Here's your regular W, left side, middle, right side, almost a perfect measured move. The height from here added on this breakout brings you right up here towards 147.50 where it has stalled. I think the notice where the 200 comes in right at 139. I think that's your pivot for today. You lose the 8-day, you lose the 200. That would be a good line to shoot against on the downside. Let's look at the 60-minute chart. We do have a little gap here. I can't recall where we are pre-market, but let's say we're down 1%. We're going to be down here at this 138 level. Pretty good support with these high volume over price bars. So I would be keying off of the bottom of this gap at 138. Remember, we will be gapping down. So this gap, let's say it opens at 138. You'll have the gap will be on the top now, not the bottom. So that scenario we talked about, race it up, fill that gap, and then roll over in the afternoon is just one scenario to keep in mind. Google, we've about beat this one to death over the last couple of weeks. You don't want to see price close below 118.50 back into this big trading zone. If you're on the daily time frame, very objective. If this rolls over and closes below 118.50, then you can get short with a stop above, and then you're playing for down in the 113s as first support, and then 111, and then 106 if that were to break. And then of course what that would indicate is fake breakout, right? Bull trap. Bull trap. Breakout. Come back. Support doesn't hold. All these people know they're wrong. That's the trap. Netflix. We had this gap down the other day. Notice that price came back up to fill it. Has not been able to get above 247.50 since right here. So now we've got this big $10 gap. Starts at about 237, 237.50. You'll be able to see that clearly on a finer time frame. But you want to be short for this $10 gap fill if you get an opportunity to do that. And then notice big line of support right here on your large volume over price bar and all this resistance. So at the bottom of the gap, that would be a place to take some profits and then see how price handles that. And if it breaks next week, then you can get short against 227.50 and look for more downside with a stop just above. Semis. Daily time frame. Notice PPO has started to waver at a high level. RSI is hanging in there, still above 50. But we've got a line of rejections here at 247. We've marginally dropped below the uptrend line. You got to watch this level right here like a hawk today, because you break back down below more or less the midpoint of this value range, then very good chance that you come down into 226. Let's look at the daily or 60-minute chart to kind of fine tune it. Here's your 238, and here is the bottom of your what am I trying to say? Your support area. You've got 238, then you've got a $3 gap, and then this will be a line of support after that. And then, of course, if that breaks, then you got, gaps and other levels to consider. But I think today an important level is 238 to hold. Your second level is 236 at this prior low. That would certainly open the door for a move down. Notice on the indicators, we went green, then we went in the bearish regime. Look at how the profile is rolling over right at the 0 line. That's always a tip-off that what am I trying to say? It's bearish market behavior when you get a PPO that goes negative but then can't get back above the 0 line and it rolls over just below. That's always something you can watch for in your charting. Crossovers just below the 0 line are bearish, just as crossovers right at the 0 line from above are bullish. See how the PPO came down and reset at the 0 line, and that gave you the next leg higher in price. ARC-F. Trading range, breakout, stall, coming back. You don't want to have price come back into the trading range. That's your swing short right there. Notice bear cross here. Notice a warning here in the sense that testing uptrend support right at the 50 level. And if this were to break, this will have crossed. Then you'll have a bear cross on momentum. You'll have RSI below 50. And most likely you'll have price back in to this trading range where the target will become the bottom of the range. Let's look at the 60-minute chart quickly. You want to hold 1950 if you're a bull, and notice the big volume over price void here where a break below 1950 will bring you into 1875 rather quickly. Genomics has already made the move. Resistance, 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 resistance. Breakout. Resistance, resistance. Resistance again, rejected. Breakout, back test. Moment of truth. It either holds or it doesn't. A break below 38 opens the door to lower. A hold here is a breakdown and a back test. So 38 is paramount on genomics. ARK daily. PPO bear cross. RSI below trend, sitting right on the 50 level on the indicator, and price coming back for a back test of 46 where it broke out. So in my mind, that is a level that has to hold. Let's see. Yeah, I have it at 45.5 actually on this chart. Right in that area, you can see the importance of it going all the way back. So, if we gap down, we may be there already, leaving the overhead gap above. So that's the level on ARK. And here we are, ARK W, same as all the others. Trading range, breakout, rejection, back test. Got to hold this level here. Otherwise, you're back in the trading range. First target is the midpoint, 52.50. And second target will be back down at the bottom of the box. Let's fine tune that a little bit. You can see bunch of rejections, resistance, came back for a touch at support, came back for another touch of support. You break down below, then you're back in this big trading range, but with a gap above that would be yet to fill. So I think it's an important day. I've laid out a lot of bearish scenarios. I think, the stall at the top is important. I think options expiration is important today because option expiration weeks are usually bullish, and we haven't seen anything so far this week that would get us all bearish other than the stall at the top. So what I'm looking for today, I'll just say my base case. It could change, at 9:31 or soon thereafter, is options expiration holds it together today, and then we see more volatility next week. One thing that you could do as far as managing your positions, of course, I have no idea what you have, is if you want to hold on your longs, get some protection, right? In case next week turns out to be ugly. That way you'll be, protected. How much protection you get is totally up to you. Whether you want to protect it all or half or a quarter, that's totally up to you. One way you could do that is target ARC, the ARC complex, the ones that that we pointed out, because if, let's just say, the Qs are down 2% Monday morning, Bitcoin falls apart over the weekend, Qs are down 3% on Monday, ARC's going to be down 7%. It's going to be your high beta to the downside. And another thing that I'll mention is there's been some tremendous rallies in the junk names. You can fill in the blank and pick out which ones fit that bill. High valuation, the same old thing, high valuation, no profitability, seemingly all the things that ARC is about. I like ARC because she's done a lot of the hard work for us to figure out those unprofitable names. And if you don't want to target one particular stock individually, then I think ARC is an easy way to go. And I think that way, if our worst fears are realized next week, where they pull the rug, at least you'll get some horsepower to the downside with having some ARC puts in your back pocket for next week. And remember, we got Jackson Hole next week as well. Now, it's not till the back half of the week, but they could say anything, right? Or be quiet. It's kind of a black hole. You don't know what's going to happen. But then I think things will get a lot tougher in September as the QT ramps up. And, whether they go 50 or 75 at that September meeting is almost irrelevant. They're going to keep tightening. And the recent market strength, I think, gives them more license to do that. And by all means, I would hold on to that TLT short, because if if you've got the TLT short, hold on to it, and then that'll be another position if interest rates start to take off. And then if you get stopped out, you get stopped out. But I would hold that one. It's still below the 50, so that is a good line to use as a pivot. So let's wrap it up there. I hope the analysis was helpful. If you're new to the channel, you know what to do. Hit the subscribe button, hit the alarm bell, jump over in the show notes. There's a link to the blog site where you can drop in your email address and get all my content delivered directly to you whenever I've got an observation on how the market's going, or a trade idea, something like that. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.